Hey, it's Mac with PriceActionTradingSystem.com, and it is Thursday. It's October 29th. This will be our chart lesson for the day. And this is going to wrap it up for the week. No more chart lessons on Friday, so no chart lesson tomorrow. We'll be back again to do it Monday. And what looked like was going to be a range day today turned out we had a really nice move here. I don't know if there was some news item or whatever. It doesn't matter because we don't listen to the news. And generally they write the news to fit the price action after the day is over. So it took me a long time to figure that out and learn that. I used to get up every morning, watch the news, and try to figure out what was going to happen. And you're just wasting your time doing that, to be honest with you. That's my opinion. And after 20 plus years of this, I feel pretty confident saying that you're wasting your time trying to watch the news to figure out anything with the markets. And even when you go read the news on something like this, they will have written it after this happened. And so they write the news to uh, fit the price action. It doesn't mean that a news item couldn't cause that because something could have come out, but you can clearly see the price action predicted it ahead of time because you would have already had this trend line across these first two swings, and it actually got confirmed pretty quickly. I wouldn't necessarily trust this one until it came back here again, but when it came back and bounced again, uh, I'd pay attention. So, regardless of what caused it to take off right there, the price action predicted it really a couple hours prior, at least a couple of hours. So that shows you the power of price action. It tells you what's coming and what's going on if you're reading it properly. And you can clearly see that this was a two-tiered. You can see even back here prices working off that midline. And if you draw your equal distance, it goes straight up there. You actually get a little overshoot and it reverses, and that's pretty typical. We came back. So in the end, it really is a range day, but for all intents and purposes, from the open around close to 8:30, we traded up all the way into the just prior to the close. So I'd call this an up day. Uh, as far as trading, the majority of the day trading, it was an uptrend. But in the big picture, if you back out here, you can see it's still a range day. We really closed almost unchanged. We closed up just barely from where we closed yesterday. I'd almost call that closing unchanged. So uh, not much real difference. So anyway, let's back out and go through the trades. And uh, just as an update, my eyes getting better. My eyesight's better today. I still didn't trade. I probably won't trade tomorrow. Probably wait till Monday, but I'll probably be back on regular schedule Monday. I'm trying to rest my eyes as much as possible. The doctor did tell me I could look at the screen and do normal work and read and watch TV and all that good stuff. So it doesn't hurt me too. It's just uncomfortable because I still have a tiny bit of double vision in that eye as of this morning. It's much better than it was yesterday, and it'll get better each day progressively with time. And hopefully by Monday I'll probably be back to normal. I hope. But I'll update you at that point. But I'm doing great. Thanks for all the notes and emails and well wishes and all that. I appreciate it. So I'm going to back out here. We're going to talk about the trades. 7 o'clock came just as we're rounding this bottom right in here and starting to trade up. This was a pretty good downtrend right here, and there's been no break of this trend line. Uh, I don't see anything in here that would make me want to go long yet. Definitely not down here because this is not really rejection out of here. Prices are just kind of going sideways. We ended up bouncing out of there, but you don't get a setup for that. So in the next thing you know, we're bouncing down off the main trend line again, just confirming it and proving it out. So there's a lower high here that you might have considered, but the signal bar is just horrible. So then you get the failed second entry long here. Notice that new swing high, and you try to go high once, you try to go high twice, and all of those are turning down right off that trend line. Nice bearish bar. There is one concern here, and that would be that you could get out before these lows right across here. They're really not confirmed that there's a range here yet. We needed a little more price action before you could really see it, but there's still support across there. You can see that bar close there, those bars close there, and so there's plenty of room, so it's not an issue, but that's the only worry I would have there. Make sure you got enough room to scalp out. But you can see you're making lower highs right off that trend line each time, so we're probably going lower. I really thought we'd take on off here, but you can see there is a little bit of a trend channel working up. We did have an overshoot here too, though, so prices could just take on lower, but we ended up running up here trying to make a new high before prices sold off again. And we actually got a close outside this channel. So prices were trying to come to an end here, but on a trend that strong down, you're going to retest the lows most likely, and sure enough, that's what happens here. And unfortunately, you don't get a setup here. If this would have broke higher, or you got a bearish bar here or something, and there's a lower high here, but it doesn't break higher, it's just kind of an inside bar. It is off that key entry point there, but that's not the main. That's just more like a micro trend, and you don't have a whole lot of price action showing that it's pretty strong like it is by the time it gets way down here, because at that point this is really all you would see, and that's looking like congestion. That's kind of in the middle of this little range, and that's an inside bar, so I just don't see a setup there. So it drops on down, and it tries to go higher once, then it tries to go higher twice, and really you get a second entry short there. It's not a perfect setup by any means, but it's a really nice signal bar. You are expecting prices to make a new low. It is off this key entry point. It is a failed second entry long. It's a second entry short. It's a good signal bar. If it would have broke higher, I'd have probably and had a little more room to the lows here, I probably would have made that one red, but it's a little aggressive. So, but you can see it. That really looks like one move down. So you're probably going to get a measured leg at a minimum, or attempt at a measured leg, I should say. Sorry, I didn't mean to do all that. So you measure your leg, move it down, and there's your target. And you can see we went just a hair lower than that. Basically, we started closing in there, dropped down, trapped a few people to the short side, and off it goes to the upside. And unfortunately, you don't get a chance to get in this long until way up here. There's no reversal pattern. I mean, that's actually here, and that's not the proper reversal pattern. You can see it fails real quickly and comes back to the EMA. So you don't really want to enter there. And then when it comes back here, you don't get a setup. And finally, you get a higher low. And again, it's right off the key entry point. So you may take that trade. I like that one because you've got this one big leg up. And so now you'll probably get a measured leg up similar to it. And hopefully, you know, your hope here is that you're going to go all the way back up and retest the overnight highs. And you can see that's a perfect measured move before it turns down. You get this little channel working down. You get a close outside, move to a new low. Nice signal bar. Basically, that's a double bottom. I like going long there just to try to get a retest of the high. And maybe we keep going and set something else up. But that's a nice move. And it's a quick, easy move up. And then you actually come back 2 legs back. And sometimes you'll make 2 legs to a new high. And so there's a chance we can go higher. This is not a perfect setup. It is a second entry long. The bias is still up. It hasn't really changed yet. It looks like it's about to change. So you may take that trade. It's a little aggressive. I marked it green. And notice the second entry, it would have worked for your scalp, but it doesn't go very far. And the fact that it fails and turns down and gives you that great signal bar, you might go short right there. Because it's probably going to make that next leg down. Remember, the market moves in twos. We're always looking for 2 legs. So we're looking for that measured leg. And then we make a little more in a measured leg, and we're going higher again. And again, you get a failed second entry short. It's not ideal because it doesn't come back to the EMA. However, it is off this key entry point. And there is a 2-legged correction here, so we could get a measured move like this first move up here from that point on. And if you actually measure that, that's going to be a nice move if we get it. So there's some reasons to consider trying to get long here. on a reversal. So that's why I like that one. And you can see where the target is. We don't quite get there before well, actually we do end up getting there before the day's over. We actually surpass that, but we don't get it on that next leg. So anyway, I like that one. We come back. This one's tempting, but it's an inside bar. We're kind of, it's the first break, but you really need to wait on a higher low or a second entry or something. You could look at this as a failed break lower. If you had a little better setup here, maybe, but I just think and notice there's a little resistance across there. So really it's coming back to test that before it goes higher, but I just don't think it's a very good setup. And you actually get two legs back here with the second entry, but your signal bar is not good enough. And you just really don't get another good chance to enter that one. And what it is, it's a spike in channel. It spikes up and then goes into this flatter channel. So there's really two channels, all still part of the same move there. But you just don't really get a good setup. And then you're just kind of trending down and you get a break. And again, you don't really get a move up yet. You don't get a higher low or anything. You finally get a second entry here, but now you got this part working down. And you come back here and you actually get a failed second entry long and it breaks higher and turns down. So you may take that short. I like that one because you would think that we're probably coming back to the lows. Since we didn't get back up to the highs of the range, you would think that if you look here, we're finding resistance at this level across here. So I don't have a line on there, but if you just put this line, you can clearly see that resistance right across there. It's coming from this morning there. This was a little spike above it, but really most of your resistance was right along here, and you can see the line as it works across. So there's resistance there. So it's not surprising that we're turning back down there. Turns out we blow through that before it's over, but at this point, prices look like they're going lower, and this is going to be a range day. And so you get that failed second entry long, and it actually breaks higher and turns down, so that's an engulfing bar, but it's still a failed second entry long. And I don't know, as long as you got enough room before the lows here, you might even enter down here, but that makes it a pretty big bar. I like when it breaks higher, entering one tick below. You do get a failed second entry long there, but look how sideways and congestive looking it is, and we've had a break, and now we've had two legs down, and it's getting. Notice that you made that low, and then you didn't go with just a couple of ticks lower, and then you're just kind of going sideways, and so that one's getting kind of dangerous right there to be taken on a first entry. You need at least a second entry or a lower high or something, and you never get it. You actually go higher here and get a reversal pattern. Notice that you go first entry and you push through and pull back. That's what a good reversal pattern looks like. And this is you probably wouldn't have this channel. I didn't have it on there yet because I didn't draw it till we made this swing here. So you wouldn't have had this. So, but you can see even before this was drawn, prices were reacting off that midline. But it still confirms this trend line coming up. It bounces off the EMA. It's a reversal pattern. It breaks lower first and turns and goes out the other side. I like entering there. Hoping prices will go back up and test the highs again, and that's what they do. And then notice you get right back up there to the same resistance. You get a close outside, new high, and it turns down. You could argue for this to be green because of all the resistance across there. I didn't mark it because generally you want to wait on a lower high. Let me just go ahead. I'll make it green, but it's a little aggressive. But it would have been a great trade, but you don't know that ahead of time. So you're just kind of playing the odds, and it's not a perfect setup. So, but we'll at least give it green. And you don't get your lower high to here. And that is also, notice you're coming down, you get a first entry, and you try to go lower, and you get a second entry. It doesn't really look like two legs, but it is. And either way, it's a failed breakout of this. And it actually breaks higher and turns and goes out the other side. It's another trap. And so you're probably going to get a measured leg down at a minimum. Oops. I don't know why I'm clicking on that. but measure that leg. And there's your next leg, a perfect to the tick measured move. And when you get this third one, it's about the same thing, another measured move. And notice there's two legs back. There's actually a first entry, second entry. So this is technically a third entry, but if you look at that, you can clearly see two legs back, and there's a two-legged correction in the middle. So on a bigger picture, that's still a second entry. It does confirm the trend line down through there. Channels. This channel is a little flatter than that. You actually you could have drawn this here, but I would have kind of doctored it up a little once you get those lows. And so I believe it to be more like that right there. And so I like that second entry. There's a lower high right here, but it's just a first entry. And I think there's a lower high here, but if you drew that trend line, you're going short right into it, and you can see what would have happened. It would have bounced real quickly on you. It may have still worked, but I wouldn't take that. Not on a first entry, and not on a lower high that didn't come back, at least to the EMA, giving you plenty of room to get out. Because when you draw that trend line, there's a concern. And if you drew that trend line, it was clear to see that you had to kind of play with it. But it was if you're experienced at this, it was pretty clear to see that you could find this where prices were working off that line there the whole time. And even if you just drew it off the highs, it still looked like another midline in there. I won't go through all that, but it's there if you play around with it. I don't know that you necessarily go long here. I marked it because it is a second entry. Notice that high, first entry, second entry, and it does confirm this trend line. The only problem is you haven't had a break of this trend line. Technically, there's another way to look at this too. The way I originally had it, if you draw it off the highs and you use that first close, it still fits, and you get a break and a leg down and a higher low. So there's a couple of different ways to look at that. But when we came up short, I kind of adjusted this to fit like I showed you a minute ago. But I want to show you something here. See that little gap right there? And people will say, what gap? What gap? There's no gap there. Well, the bars don't overlap. This one closes on its highs. This one opens on its very low, and it never ticks lower. So there's a gap between those two bars. Notice how most all bars have some overlap, but say between that and the bar beside it. When you see those little gaps, that tells you your trend line's probably right. So in the end, this is the way you should have been looking at this. But I ended up adjusting it earlier before that formed, and so I just left it the way I drew it, because a lot of people probably might have done the same thing, because generally you want to check these, and you probably would have drawn it where they fit best across the bottom, because they don't look like they're fitting right, and that does still look correct. So there's just a couple of different ways to look at that, but in the end, I believe if you follow my rule on how I draw these first two swings using the high or low of the first swing and the bodies off the second swing, I think you come out better on this one. And maybe even it's still just a tad higher like so. And that gap kind of confirms it. So you get your break, move to new low, and then you're going the other way. If you played it this way, that gives this a little more credence to go long. I still think you're better off to wait. And then by the time you get your high or low, it's too much congestion there. So you really don't get a chance to get in this one. There's actually a second, it's not really a second entry, but there's two legs back. But again, it looks very congestive. So you're better off just to wait. And you really don't get a chance to ride that one up. And then you're in another one. But it turns back down here. Notice it breaks out the top, and you get a first entry long, and it pushes lower and comes back. So you get a double test under here, and a failed second entry long, and a nice bearish bar. So I like going short there. And I think what was going on were there weren't enough people convinced this trend line was right. But when it comes back and tests it again, look what happens. Look at that move. And that's probably why this suddenly takes off, because when this comes back and test this line 2 more times and it holds, if you back out and look, people are pretty convinced by this point that, hey, this trend line's correct. You know, we've tested it 1, 2, 3, 4 times now, and it's a shame you don't get a really good signal bar here, and you don't get a reversal pattern. It just takes off. And so the first time it comes back to the trend line is here. And I'll tell you why I marked this one. It's not a great entry setup, but you're moving up and you get your first entry and then you move up again and you kind of get a second entry short. It technically breaks lower and then makes a little higher high, but this is still all one move. And it bounces off the the trend line, and then you get this little bitty inside bar. So technically your entry would be above that little tiny bar, because that's where the failure really takes place. So, and that was a strong move. So you're very likely to get another leg. And this is starting to look like a really strong trend. When you start to see these little bars with lots of dojis and stems that just keep working higher, and your corrections are real shallow like that, and you can actually even see it starting here. Although you get a fairly decent correction here, but then we start back. And when you see that, that is a very strong trend. It doesn't look like it, but trust me when I tell you this, when you see lots of bars like this, when they have stems on both sides and the corrections are very shallow like this, you just go sideways. You can't really correct. You just kind of go sideways, and you don't get anything more than a bar or two that goes lower, and you end up with a lot of stems. That's a very strong trend. And it looked like all we did was we kind of moved up, and it was a little too steep, and we flattened out. And so I like this one. Notice there's a high first entry, second entry, plus that kind of confirms that little channel to the green channel to the side. That's a nice bullish bar. Off it goes again. There's another second entry right here, but by this time it was clear you could clearly find this channel, and it was pretty obvious this was going to be the highs up here. It ends up going higher and even breaking through temporarily, but you can't risk that going long right into that line, because it won't always do this. The difference is this is a pretty strong trend, but I still don't think I would risk that. Then you just kind of work down. There's a failed second entry long here, but you've already pretty much made 2 legs down. And then notice it bounces here, and that takes you into 2 o'clock. So you really, after this 115 trade or so here, I don't see anything else I like here. Most of the reversals today were like this. You just shot right through the EMA and pulled back and tested it and took off. So the only reason normally if it was a downtrend and we were correcting here, I'd probably say, hey, you may take that trade. But this is an uptrend, and the big main bias is up, and this is kind of a transition area, and you can get fooled right there. So I'm not going to mark. I wouldn't take it, and I wouldn't mark it, because look how strong that move is. And when I tell you, you see these little bars with very shallow corrections and lots of stems that look like dojis, that's a strong, strong trend. Don't try to counter trend that. Don't try to counter trend trade that. So anyway, again, for the most part, this was a 2-tiered channel working up with lots of little micro trends in between. And it really wasn't that hard to find this trend, but it was hard to know where the upper side was if you don't have a lot of experience at this. So I've learned, to move it around to where you see the midline fits the best, and that tends to be right in there. I think I had it a little lower, like right along there early on. And you can see it even fitting way back here at 8:50 this morning. But yet you don't know this channel is going to be here until it gets confirmed at 11 something. And people will tell you the market's random. I dare you to explain how that could happen if the market is truly random, 100% random. It's not. market geometry, which is what this is, these equal distance moves and measured moves that I show you are real. And I show them to you every day. So anybody tries to tell you that the market's totally random, I disagree with them. So I think I prove that every day here in these chart lessons. So anyway, we're at 25 minutes. I'm going to wrap it up. This is going to wrap up the week. Again, no chart lesson tomorrow, but hopefully by Monday I'm ready to go again and we can have a normal week next week. They have raised margins. I'll say this real quick before I close up here. And I know that at least one broker, or one of our brokers, is going to go to 100% normal CME recommended margin on election day. So obviously they're expecting the possibility of some extreme volatility over the next couple of trading days. So just be aware of that. If it's really crazy Tuesday, maybe, especially Tuesday night when the election results are going to start coming in, maybe you probably don't want to be trading the overnight Tuesday night, and you may not even want to trade Tuesday. We'll just see how it's looking. And Wednesday you may not want to trade. It just depends on how crazy this market is, what's going on. Obviously, you don't want to miss a great opportunity, but you don't want to get burned because you're being greedy either. So, I mean, if the market's crazy and the margin is out of a lot of you I know trade small accounts, and so you don't want to get a margin call and get kicked out of a trade and have a losing trade because you had a margin call. We've had that happen to a couple of people lately, and they couldn't figure out why they got stopped out of a good trade, but basically they didn't have enough margin. And so their broker closed their trade, and that could happen to you. So just be aware. If they suddenly doubled the margins, I'm not sure exactly how that works because I don't know if that's ever happened while I was in a live trade, that they change the margins during that trading day. Usually it's the trading day before or the night before or something, and you know before you're trading. So if they did do it during the trading day and you're in a trade, I would guess that they don't honor your original margin. They make you put up the real margin that you're supposed to have, and if you don't, you'll probably get kicked out. Again, I'm not 100% sure on that because it's never happened, but it might be something you want to read up on if you're concerned about it or have a really small account you're trading off of or whatever. But just be aware of these margins and the volatility that could be coming up, and obviously the brokers are expecting it to happen. And the CME is as well because they're recommending the margin increases. So I've read quite a bit of stuff coming out from the markets expecting a lot of volatility, and so who knows what's going to happen. Just be prepared is all I'm saying. Maybe nothing happens. Maybe it's a normal trading day every day and everything's hunky-dory, but just be prepared because you don't want to get caught off guard. So I'm going to wrap it up. We'll be back again Monday. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.